Here we have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. Here we can see that the stock is kind of attempting to stabilize at kind of a mid-range level relative to the highs and lows that have been seen over the last few trading sessions. We're reaching kind of a midpoint here. This looks like a bit of a period of indecision in the stock. It's a bit surprising to see this type of behavior because we're starting to see some significant divergences here within the technology space as a whole, really within the Mag 7 stocks. Some are faring much better than others. For example, we're seeing some fairly steep declines today with NVIDIA. We're also seeing some massive declines in Facebook. That would be Meta Platforms stock. We're definitely starting to see some divergences here as far as performance within the technology sector, and I do largely expect this to continue for the rest of the summer. I think that Thursday is sort of a crossroads, sort of an inflection point, and I don't believe that we're going to start to see kind of a reversion back to these situations where if it's a good day for tech, then it's a good day for all tech or something like that. Or a good day for the market, then it's a good day for the Mag 7 stocks or something like that. I think we're going to start to see some more significant breakdowns in some stocks and then some rallies in others. With Tesla, we're seeing a bit of a midpoint here. So this isn't really as bad as what is being seen with NVIDIA and Meta Platforms, but it's also not as good as what has been seen in Apple, for example, or maybe even Intel. It's not a Mag 7 stock, but those stocks were actually able to recover all of their losses from last Thursday and then actually post new highs as well. We haven't really seen that. Um, here, but we're starting to kind of stabilize a bit after finding support, which was found at roughly 232.50. So this is a significant level going forward, and it's really kind of the only thing that's stopping share prices from falling back to my main critical level here, which is really found just above 220. If you've seen my prior videos, you'd know that I have put a lot of emphasis on this downtrend line, which was generated from the mid-July 2023 highs, which posted just below $300 per share. After these highs posted, we did see a large series of higher lows and higher highs, defining this downtrend here. But these most recent rallies have been quite substantial, and they have invalidated that downtrend in the process. So this downtrend went on long enough that I still think that it's got some kind of residual effect in the market. I don't think it's quite gone just yet in terms of its broader influences here. And I do think that we could start to see some bounces here from this trend line. I tend to not like those types of moves, but I think that this trend movement here was significant enough that we're likely to probably see a bounce here on a retest. So, in other words, if we were to fall back toward this 220 level, I think that this downtrend line here would be one of three different technical signals which are developing here, which would really kind of point to a potential reversal zone in the stock if we do start to see prices trade lower. But as I said, we're getting a bit of a mixed picture here. I think Tesla currently is kind of in the middle of the road, and then the bearish territory would be more definitely Meta Platforms, and also Nvidia. I would also put Nvidia into that category because we're breaking some significant lows today. I suggest that people look at those two videos. I just posted those two videos earlier today. The Meta Platforms video and the Nvidia video are interesting in that we're seeing some fairly significant price levels start to break. But then on the other hand, you've got some pretty strong performances that have been seen in Apple. So I wouldn't really put Tesla at this point in either category. I think we're kind of trading at the midpoint of this broader trading range. So to the top side, I would be looking at 271 as a potential resistance zone. And then this would be followed by 233 roughly to the downside as sort of a trading range that could be starting to develop here at upper levels. As long as we maintain this positive reading in the relative strength indicator, I would expect prices to continue moving higher. We were trading in heavily overbought territory here, and this did go on for quite a while. So, you have to start to see some declines at some point. You can't just have these massive rallies like this. And we did see a very massive move to the top side here. Overall, these types of things are to be expected because you really can't trade in overbought territory for this period of time without seeing some type of retracement or at least some type of sideways consolidation pattern. I mean, you really need to see one of two things happen here. And it is starting to look like we did get a bit of a downside correction, and now we're looking at a bit of a consolidation pattern at the midpoint within this most recent trading range. So, overall, the picture might look bad for some. It might look like we've started to fail at a major resistance zone. I'm not quite there yet. I would really need to see a break of this 220 level in order to really start to get bearish or to start to suggest that a top is in place. We've got this moving average cluster here that continues to move higher, and we've got several crossovers within that moving average movement, which does suggest that bullish trend momentum continues to build. So all this is really being confirmed by the indicator reading itself. We have moved out of overbought territory, so that's another bit of a positive signal. Markets might need to move a bit lower here, and we can still fall. We can still continue to fall here in the relative strength index without breaking this uptrend in the relative strength index reading. So there are some factors here that should be noted. Recent declines are not as bad as they might seem. Um, Given the strength of the prior rally, it might seem like these declines are a bit massive. I mean, we did see a drop from 271 to 233, so that is a bit of a substantial move here. But for the most part, we were caught by the 20 period exponential moving average, and we're still quite a ways away from my line in the sand here, which does come in just above 220. So as long as that level doesn't break, I'm expecting to see at least a period of sideways consolidation. I think that that's probably the most likely outcome here near term, because the indicator reading is still relatively elevated. We're not exactly overbought here, um, and we could extend a bit further to the downside in that reading before we even start to test the overall trend in momentum. So there are several factors here to watch, and we should keep in mind that there could be winners and losers here. And I would like to see some comments about what people think about who will be the ultimate winners and losers here within this summer trading period, because it does look like we're starting to trade at a bit of an inflection point for the technology space as a whole. So here's the current market analysis for Tesla Incorporated, stock ticker TSLA.